All right, so for today, we're going to be covering how to find different trades and kind of pairing up some different reads to gain some confidence in what you're seeing. So, there's two ways of going about this. Today, we're going to be covering flow and chart. So there's going to be a couple ways of going about this. Obviously, either or flow or chart, depending on what you start out with to find a good setup. So let's pretend, we'll start out with chart first. So usually for me, what I'll do is I have my watch list here of stuff that I like to look through and trade, a bunch of names that I like to trade. So I've shared this link with you guys. You can add this watch list to your own trading view, or just copy it and set it in whatever charting app you want to use. So usually, what on the chart side of things, you can just start scrolling through, on the various time frames and figure out exactly what's going on here. So like right here, okay, that's a quick, inverse head and shoulders on Carvana. I usually go like 1 hour, 4 hour, 1 day, those sort of things. Just scroll through and see what we can find here. Okay, so on the higher time frame, the daily, and this is when everything's kind of split. So I'd kind of go through and just, okay, interesting. So weekly, it looks like we're getting a big breakdown and reclaim rejection there of that rising wedge. Interesting. And then you can kind of just start to scroll through all these different charts on our watch list here. So as you can see, Meta's at a very, very important point here, that if it were to lose this 475 level, I'd be pretty bearish. But just, I'll quickly scroll through and do some mental looks, like, okay, we can draw a ray here real quick. Let's see how that looks. I have all my, let's see how that looks. Okay. Failed reclaim, interesting. Okay, noted. And then you can kind of just go through. And so if you see something that has a lot of room, so like overall, if I have a bearish bias on the S&P, this looks like it has a lot of room. If we lose 475, we'll probably head down to the prior lows here at 415 area right here. So basically that's how I would start out with the chart. And then I would come over here to unusual whales. And within unusual whales, let's just say, we'll duplicate. Well, what am I doing? We'll just go. So we'll pop open. First off, I'll just do a quick comb through. So depending on how big the move is, so if we went to this 415, that's the original, move that I would expect to see if this were to sell off. So I would go to unusual whales over here, and I would know that 415, okay, that's about 12, 13% out of the money. So I'll come over here. We'll just reset everything, go to our base here, we'll go to Meta, and let's see if we can find anything interesting with Meta. So we'll go 10% out of the money here. We'll go out to, let's see, 14 DTE, because that's what we want to look for. And basically we'll come in here and we'll see, let me change premiums as well. So usually you want to look for anything on a stock like this. You pretty much just want to start with like minimum 10K of what you're looking for, which, let's see, I'm bugging out a little bit here. So normally that's what, we'll even go 30 days out. Normally that's what I would start with, just seeing exactly what the overall flow looks like from today. So it looks like we have a lot of call selling here, some put selling. Interesting. Okay, cool. So nothing too decisive yet. Let's even bump this up a bit, see if we can find anything interesting. Okay, so over the past few days, we're seeing some interesting stuff come in. Okay, and these are all for May OPEX. So we'll pop in here. So this is a credit spread. So they're selling the closer to the money calls and buying the further out of the money, or selling the closer to the money puts and buying the further out of the money puts. So that means that's a credit spread, which is net bullish. So we're going to ignore those. We're also going to take a peek here. Same thing. So it looks like they're loading up initially it looks like they're loading up some credit spreads here, and then we can even go to here and see, okay, yep, 425, buying 420. Yes, these are all part of these couple orders. And then it looks like right here, we got something coming in directly at the ask just about 11 minutes later. Okay, so that's something that would definitely be noteworthy. And then on this front, we can also look here, even over the past few days. This is why this is really cool, because we can see, okay, someone's selling 600 strike calls here for May 16th. So we can scroll through here, look at what's going on. So it looks like this was on April 17th on OPEX. So someone was exiting. It appears that day you would probably take a guess that it's exiting because the volume is less than the open interest. But if you look at open interest today on Monday, would you look at that? Most of them carried over. So that's not going to be a full exit of the 6,000 calls there. So someone is definitely selling to open some of those calls. So nothing super decisive, just kind of a data point that you would want to look at. And then, okay, we got some more 465p selling here, which that's from the 14th. This is from, the 14th. So it looks like they did a partial, well, it carried over. So interesting. Yeah, I would have to dig a little bit further into that. So these all came in roughly the same time. Okay, and these are not, these are marked at the bid here, right? So they're not strictly at the bid. If you look, the earlier fills were about in the same area. So I would venture to guess that while this is marked as a sell to close, it's probably not actually sell to close, because we can also look at the volume here. So we'll go back, take a peep. So if you look at the volume here, 1318 and then 290 OI. So if we add those together, we would get 1608 open interest. So 1608. So we know that only 104, when that OI updated the next day, is missing from that volume. So unlikely that either of these were actually sell to close. So that's a pretty straightforward aspect of figuring that out. So we know that someone has, this is how we can start this out, because we just found an actual gem. This is completely off the cuff. So so we know that someone found this order right here, and that they paid an average of about $12.50 for those 465 puts expiring May 16th. So if someone's opening a fresh long, that might be a portion of it, depending on what the trend of the market is or anything like that. But if you look, they paid $12.50 for these, and they are now up, at close. They closed at 21, so they're now up about 75% on that position. So they haven't even closed any of these. The OI has only increased ever since. So that's a good hint that someone is expecting meta to be below 465. And this is where it gets really cool. If you start out with the charts and you come over to the flow. So let's go over to our daily here. We'll pretend that we found this on the day of. So we'll actually do a replay here. We'll go to the 14th. So the way that works, we can do basically so we have 465 here. For May 16th, they paid $12.50 per contract. So we know that to break even by May 16th, they need meta to be at, 450, 250. So what we can do is we can actually draw a line here. This is one really cool thing just to help you visualize it. You can draw a line here. So 450, 250 on May 16th. This is quite literally what you would want to see. So now that we have that trend line there, we know that unless they close this out, they will be in profit as long as Meta tracks below this line, outside of just, outside of any external factors like VIX, causing an IV pump or anything like that. Just in general, that's a good way to visualize what options need to see to be profitable. So right off the bat, we can see there's that close, which actually, it's supposed to go right there. So that's their break even. So you can do the math here. And if you need a quick refresher on how the break even works, so on puts, if they're buying to open puts, the break even would be 465, so the strike price, minus what they paid for the contract. And that's how far in the money it needs to go for them to break even, basically, on expiration day. So number one, you can just do this real quick. You can draw a line, and that shows the exact path that they need to see for these to remain break even, just roughly. And so you can watch that on the chart, number one. And then also you can specifically watch this exact contract and look at the volume coming in and figure out what's going on. So if you wanted to just watch the chart, that's what you would watch. And as you can see, if we take off the replay, looks like it's tracking pretty well. They're making some good money. So these are up, and we know that the target for Meta is 465 by May 16th. So right there, that's where we start out. And so we know that they want to get there if they're going to ride these all the way till expiration. Just in general, this is just a good basic look at how this works. So they're obviously below that line because they're puts, they're in profit. So that's what we're watching for. We know that the target is here, but let's pretend, they bought some time on these. So a lot of the times you'll see bigger orders come in and they buy time. They're not buying weeklies. There's no urgency. It's just a general target that you should watch for. So let's pretend, they bought right here. They get a couple days of selling. Let's pretend it bounced up here. So all of a sudden, anytime it breaks over this line, you can go back and you can look at this exact contract, the volume, what's going on, and you can see, okay, they haven't closed, but they're down. Interesting. And then so as you get closer to that expiration date, if those remain open and we're above this line, this path that it's supposed to be following, that's when you get these really good opportunities. So you can take notes of longer dated flow just to get an idea of general pathways. I pretty much just memorize most of it for now because I'll have a top few tickers that I'm watching that I'm going to be trading for the next 2 weeks, 3 weeks, 1 month, anything like that, that has a lot of action occurring or a specific move that I'm looking for. So I can trade that appropriately on a higher time frame basis. So now that we found that chart that looks interesting with that setup, and then we found some flow to back it with $1.6 million in premium out of the money puts, that's pretty solid. That's kind of run of the mill of what you would want to watch. And so from here, we now know that our path is right here, our target is right here, as long as these remain open. So you get really cool arbitrage opportunities. If this were to bounce from here, this support area that I have charted, and then all of a sudden, the price on the chart is up here, and then these are cheaper now. So now you have the opportunity to enter on shorter time frame contracts or to enter into these for a cheaper price than the whale originally entered. Because usually these are not being scalped back and forth with size like that. Sometimes you'll find that, but usually on the 1 month out contracts, they're not going to be scalping with size. So generally that's what you would look for. And that's a good start on how to get Confluence on end targets. So like if you see this entire leg down that we've had, I've specifically mentioned, I have these targets on these tickers. And even though we've bounced and done all this crazy volatility, I still have those targets because those are the longer dated flow that I was seeing. And so I'm able to have those written down, take notes on them, and then apply that and be able to take shorter time frame trades to get a much better opportunity than someone who is just buying a large quantity of longer dated and sitting on them for a while. So I can scalp in and out, back and forth, swing stuff in the directional bias that I have on a shorter time frame. So now that we have this trend line here, we can also even go down to like the 10 minute, let's say, and you can see, lower time frame setups that are happening. So, my screen just shut off of me. There we go. Okay. And so on lower time frame stuff like this, that's when you start to get much better opportunities on what's going on. So like, intraday on the 17th on that OPEX day, there's clearly some huge resistance right here historically. So on that bounce, for example, that the target is lower. So you could have taken puts, rode those into the close, and you got a $5 run, $7 run from the highs into the close on puts. So you can watch exactly what's going on from that front and be able to have some better confidence on what's going on a shorter time frame basis. And so that's how you would start it out with the chart. It's kind of the same thing with the flow. So I'll open up my scanner here, and we can just go to any one of let's just go on the longer dated ones here, any one of my filters that I have here. Okay, so here's an interesting one. So this is kind of a counter trend trade. So let's look at this. This is probably something news related. So right off the bat, we have CrowdStrike here. I haven't even looked at this chart in a long time. So we'll pull up Crowd. This was today. It's a pretty clean head and shoulders, so unquestionable on that. But yeah, we'll turn off the indicator here. Take a peek. So CrowdStrike, 420 call, 25 DTE. Let's run through this again just so you guys can visualize it a little bit easier. We can even do it down to the exact hour. So 9 a.m. Pacific right here. Definitely intriguing because it was near the low of day. So we'll go 420 call at 340 for May OPEX. Okay. So we can even pop this out. And we'll go trend line, boom, May OPEX 420 plus 340. So we'll just round up to 425 here, about there. Or we can go exact. Yeah, 340, boom. So that's the move that they are expecting to take place. So we know that that's a good target right there. You can even draw a little dot there if you want. And that's what we're expecting. So for this flow to take place, number one, you would want to, within unusual whales, you can always just save these. So you can put those on a watch list there. And now you know that someone's got, almost 2,000 contracts, 652K on CrowdStrike. This looks to be like some sort of news play here. But we see that you might be able to get the prior lower range here. If this head and shoulders doesn't play out, we can see that down here, this is, there's some good support here down at 345 area. So let's say CrowdStrike, we're going to move a little bit lower down to 345, chopped around even for like 4 days. You could get a huge discount on these contracts. And so you can identify the support and resistance on the chart and then be able to go through, let's say 5 days later, this is lower. This trader's still holding. This is very, very intriguing flow here. And so you can start to get a quick glimpse at what's going on, what's expected of that particular movement to take place, and then kind of just visualize it on the chart right there. Like I've shown with that trend line, that's the target that they want to see. So Now you have that on the chart. You can watch what's going on. You might even be able to get 20, 30, 40, 50% off of those exact contracts, just because maybe it's someone, flow comes in for a lot of reasons, but maybe it's someone that, there's some sort of news that they got insider information on or anything like that. You can see exactly what is expected. And, if it's someone buying longer dated contracts like this, a lot of the times you can get a better entry depending on what, contract it is, what the purpose of the trade is, all that sorts of stuff. So definitely something to take note. And then this is another funny thing. So Meta, like we just charted, sometimes you want to go longer dated. I'll usually do minimum $1 million premium and then no time constraint. Just make sure it's, further out of the money. So Meta 445 puts. So someone's expecting Meta to be below, someone's expecting Meta to be below 445 by 6/20, so June 20th. So we can even go back to Meta here, give you a peek on how that looks. Just pretend, we just saw this flow right here, so 445. They paid 1880. Yeah, this one would be a little bit more questionable because it's not filled at exactly the ask. So generally for the highest confidence, as mentioned in the Flow Masterclass video, you're going to want to find stuff that is filled at the exact listed ask, which preferably you can tell by going and doing that little button right there and getting a breakdown of exactly what the ask is. And then you can look at the volume to figure out, which trades came in first. So this trade came in first right here. You can see the volume is 8,550. And if you were just scanning these VRTX right here, this is a sweep. So sweeps always indicate urgency. And this shows up at the bid. So your first guess would be this is someone selling puts. But guess what? The first fill is at the ask. So, okay, why don't we'll go full ADHD here and hop over to VRTX. So right here, I don't think I've ever looked at this chart. So VRTX, that looks like it's a put seller, but it's actually a put buyer. And then we'll even check here. Did everything hold? Okay, yep, looks like all the open interest held. Wow, and then today, 3 days later, we have a ton of put premium coming in. So VRTX 485p is what was purchased. They paid $550 on those. So we can even hop over here, take a peek at what else is going on within that ticker. So you see we got some weekly calls, pretty tiny, nothing crazy. And then, we got some put selling here, still small though. Okay, so we know that the flow right here is going to be 550 each, 485 strike. So therefore, our break even is going to be 479.50 by this Friday. So we can even go here. We can just go hourly because it's a shorter time frame. These came in at 9 o'clock Pacific. So boom, boom. 479. Or what am I doing? These are at the money. So 479.50. We'll just go here. Close enough. Yeah, should be good. So that's the path that they would need to break even on those. So they paid $550 for those, and those are pretty much at the money. So I wouldn't really expect, generally I wouldn't expect that to be just a break even type of thing. This is usually a trade that, they want to go much deeper in the money. And if we look at the price on these, we can see that these were open for $550 here, and they are now worth $10.95. So they're doubled. They're exactly doubled. And so as long as this stays open and OI carries over and volume remains below OI, we are good on these. So if we get a bounce tomorrow and these come back down and they don't close out, it would be a good opportunity for you to enter. So you can kind of just literally just put that line there, put a dot, and then boom, there's your target. So you just calculate that with the break even, and that's a good way to figure out the path that you think something is going to take based on the higher conviction flow. And if you're wondering what defines higher conviction flow, go watch the Flow Masterclass video on WAP. That is a gem, and there's a lot of information in there that no one else will tell you because no one else really uses. Besides me, a lot of people just look for the big, single leg sweeps, and doesn't really matter about anything else, but I'm a bit different. I've found some additional characteristics that I, pay attention to and are big deciding factors that give me more of an edge when reading flow and figuring out what's going on. So definitely take a look at that. Give that a watch if you haven't yet. And that'll be kind of the overview of, how we're able to figure out what's going on with those bigger, more simple moves that take a longer period of time to play out. And then on a shorter, we'll run through here.